The U.S. Federal Reserve is widely expected to cut interest rates by 0.25% in its upcoming meeting on the 17th to 18th of September. This potential rate cut could mark the start of the fourth major rate-cutting cycle in 25 years. Historically, when the Fed lowers rates, it has generally been good news for stocks. The Fed's last three rate-cutting cycles happened in 2001, 2007 to 2008, and 2019 to 20. Each of these times, the cuts aimed to counteract economic troubles, whether it was the dot-com bubble burst, the 2008 financial crisis, or the pre-COVID slowdown. In the last cycle, both U.S. and Indian stock markets saw gains. For example, the S&P 500 rose by 15% and Nifty by 10% during the rate cuts. This time, experts believe the current situation is similar to the pre-COVID phase of 2019 to 20. They predict that if the Fed rate cuts rates, stocks might rise again. The Indian stock market in particular could benefit from lower commodity prices and declining bond yields. With crude oil prices trading around $70 a barrel, Indian companies might gain. However, there are mixed feelings. While lower rates can stimulate the economy, some experts worry that this time might not see the same results as before. Investors should stay informed and be cautious about how these changes could affect their portfolios. And for more on this, we're now being joined by Amrish Baliga, an independent market analyst live from Mumbai. Welcome to the broadcast. Thank you so much for joining us. The US Fed is widely expected to cut rates this week. Do you see the possibility of a 50 basis point rate cut at all?
No, I believe they will go for cuts in a graded manner. So I believe it should be 25 basis points. Though this would be the first cut since COVID, and we have seen inflation cooling off for the fifth straight month. And it's been about 14 months since the last hike. But a cut of 50 bips, I think, can indicate desperation. So which I think the Fed would surely avoid. So, my bets would be on 25 bips.
Right. Now, sir, can you explain how 25 or 50 basis point cut could impact Indian stocks?
See, 25 bips is, already priced in, like in the markets. But then surely when it's finally announced, I think the markets will surely cheer it. But don't really expect a major bump up from here just because of the rate cut. But however, like I said, in case they announce a 50 basis points cut, I think the markets will, I think most of the people will expect the markets to move up. But I believe that a 50 basis points, like I said, may indicate a desperate measure. So don't be surprised if the markets correct if there's a 50 bips, cut announced. And as far as Indian markets are concerned, I think we also need to see as to what Bank of Japan does, because they are in a rate hike regime. And that would have an effect on the yen carry trades, so which would be negative. So one needs to be, watching both these instead of watching Fed in isolation.
All right, and almost all assets have moved up in the anticipation of a rate cut. Gold, stocks, even Indian real estate. Is there a safe haven for Indian investors? How would you manage your money in this situation?
No, if you, like you rightly said, today, most of the asset classes have moved up, and especially equities. With so many multi-baggers. There are 650 to 700 multi-baggers out of those 3,000, 3,500 stocks which are listed. And about 60 among the top 500 also have been multi-baggers in the last 18 months. And this is quite unprecedented. But then if you look at, from a fundamental angle, the Q1 FY25 earnings were below expectations. You have a number of macro numbers, which is nothing, majorly positive. So basically, this has been a sentiment-driven and liquidity-driven rally. So I think one needs to be a bit careful at this point of time. So I think the best hiding place would be to have some cash on your books. So I've been suggesting most of people to at least book profits at this point of time. You've got so many multi-baggers, your portfolio has become possibly 2x or 3x in the last 2.5, 3 years. So it's time to take some money off the table, at least take your capital out. So I think that's the best hiding place.
All right, Mr. Baliga, thank you so much for joining us on World Business Watch with your insights on this. For latest news, download the WION app and subscribe to our YouTube channel.